The situation in Venezuela is grabbing global attention, and while the direct impact on grains and oilseeds is limited, the ripple effects on energy and trade could be significant. Add in China's buying pace, South American harvest updates, and a volatile rapeseed and wheat market, and there's a lot to unpack as we start the year. I'm Johanna Bota, and joining me today is Bertrand Oesterle, VP of Clearing and Execution Sales at StoneX. Welcome back, Bert, and Happy New Year.
Thank you. Happy New Year to you too. All the best for 2026.
Thank you. So let's begin with the biggest headline from this weekend. How does the situation in Venezuela affect grains and oilseeds?
So directly, not much, unless we look at fertilizer a little bit, but I'll let Josh do that better than me. Indirectly, there's a lot to consider. So effectively, the US are appropriating the heavy crude oil output from Venezuela for the US refineries to capture that value added. And the interesting element was that the US market reacted to the positive side to this, saying that it is going to bring value, and therefore there was a broad-based rally on commodities and equities initially. So that created some support for us, which was a little bit of a surprise to start with. The indirect element also is that it takes away one of the suppliers to China. And that's why it becomes interesting, because it creates an indirect consequential potential, i.e. how will China react? So Venezuela exports 4.5% or represent 4.5% of the Chinese imports in seaborne crude oil imports. So it's not that much, but it's still an annoyance. And China could say, well, because of this, we could limit our US soybean buying, or we could delay, or we could cancel what we've done so far. So that's the first element of uncertainty. Will China react? The other bit is China could come back to the US and say, well, if it's okay for you to act in Venezuela, it might be okay for us to act in Taiwan and to apply in full the one China policy. So if it were to occur, then no doubt Trump would have his tariff tantrums back on, and that could again have an impact on the pace of imports that China would have on US soybeans. So for the moment, we don't have any of those scenarios taking place, but some clients have mentioned it as an element of caution and as an element of not putting much more risk on, because they don't know what the geopolitical situation is going to be in the short term.
Of course. So let's stay on China and soybeans for a second. How much has China bought of US soybeans so far?
So far they've bought about 10.4 million tons. So Besant was saying that he wanted 12 million tons by the end of December. Then he pushed it to buy in the spring. So China is basically delivering on its commitment to buy US soybeans, so 10.4 against 12. It's going well, so in that sense. And it has had an impact on the position of the specs. The specs are slightly long in Chicago soybean. And that's despite the fact that the US soybean export pace is still way below what is expected. So it's 17% behind what the USDA figure is for the annual figure. That's slightly improved from when we last spoke, was 19% below. It's now minus 17. And for the next few weeks, what we're going to look at is how much China is going to buy or not buy, because we've got that uncertainty on how China is going to react, which I've just mentioned. But also, we haven't seen since the 19th of December any new auction sales by Sinograin in China onto its domestic market. So Sinograin did 2 Chinese auctions to make some space. They imported 600,000 tons of US soybean just recently over the past week. But we need to see more Chinese auctions in order to get rid of the old imported soybeans to make space for Sinograin to buy new. So it's going to be an element of focus as to how many of these auctions are going to be in the calendar and how many get successful.
Okay, and what's the latest from South America on soybeans?
So there hasn't been an awful lot of figures, but for Argentina, we have a production estimate still in the range of 47 to 48.5 million tons. For Brazil, the range of estimates has gone up a touch, so it's more in the 177 to 180.5 million ton range. It remains in the overall range that we've seen over the season so far, but it's gearing itself towards the top of the range.
Okay.
We hear that the harvest has started in Paraná and Mato Grosso, and there's some concern about potential dryness for January, so we have to keep an eye on this. And there's been one more element of timid news in the wire about South America and specifically about Brazil. So on the one hand, the EU has pushed back its EUDR application to the 30th of December 2026. So it's one more year before everyone gets ready to get this in place. And at the same time, we've heard from Brazil that many merchant and international merchants have looked at the removal of the incentive to remain in the moratorium agreement to not use soybean that has been on deforested land since 2008, and those people want to get out of the agreement. So it's going to be an interesting element to watch over the next year, especially with the EU EUDR consideration.
Okay, and before we move on, what about oilseeds? What's the situation in the EU, particularly with rapeseed?
So rapeseed's been very interesting over the past month. It's been very volatile, and a lot of people are still trying to put their head around it, and it took me some time as well to do so. So if we look at December, rapeseed just went down. February went down to all the way to 446 and a quarter, and people were asking, what's the explanation? So the obvious explanation was the fact that the specs have simply gone out of rapeseed. If you remember when we spoke last, I was telling you that the specs had gone into rapeseed because China was buying Australian non-GM canola. So the view was that the rest of the world would have to come to the EU to buy non-GM rapeseed. And the specs had built a 38.2 thousand lot long position. And over December, they just got rid of that position. And last week, that position was just 2.6 thousand lots long. And we're going to get an update at 4 o'clock today. There's probably no spec left.
Okay.
So that explains the downside. And the downside was quite severe in the sense that when we were 446 and a quarter in February, the RSI was just 25%, so very oversold. And people were expecting a bounce, but that bounce was difficult to justify when the specs had just gone out. So we have had a bounce, and the difficulty has been to justify why the bounce occurred. So the RSI is currently 53% on February. So we've gone from 25% to 53%. It's a very good recovery from a technical point of view. And the technical bounce has basically been attributed to two elements. So there's talk in the market of some crushers panicking a bit about finding supplies, especially out of Ukraine. Ukraine has been hit more regularly by Russia in terms of port facilities, but also vessels that go to Ukraine. So there's less exports out of Ukraine, and it seems that some crushers are buying rapeseed in order to manage that lack of availability in the short term. And at the same time, we've had some talk of cold snap issues as well.
Okay. So before Christmas, you were expecting a wheat rally. Did it happen?
So yes and no. Okay. So I've got to be very transparent on this. So when we spoke, we were 511. This morning, we are 513 plus. So in a sense, there's no rally.
Okay.
But the rally did take place in the sense that just before the holiday break, I was telling you that wheat was getting close to a combination of two technical elements, whereby the candles were going below the lower Bollinger Band and we were going into oversold territory. That went into play with the market going down to 501. We had a technical bounce on March 26 Chicago wheat all the way to 525. And I got slightly disappointed because it got sold immediately. So 525 was interesting, but it was the mid Bollinger Band. I was expecting a bit more. I was expecting the rally to go all the way to the upper Bollinger Band, as we have seen regularly when those two elements get combined. We see a full retracement. We didn't, because the market got sold again.
Is that driven by the heavy supply fundamentals? And if so, is there anything that could turn wheat even slightly bullish soon?
So yes and yes. So we've been talking about the heavy fundamentals for quite some time. And those heavy fundamentals were the restart of this 2026 year. It's still heavy in terms of output estimates for Canada, for Australia, for Argentina. And there's still been an awful lot of discussion about Argentina. So the figures for Argentina are getting bigger and bigger. The crop would be 27 to 28 million tons. It's way more than a 22.4 previous record. So in a sense, that's heavy production fundamental update is still there, especially at a time when the Russians are still trying to catch up on their export program. They still have no export tax for the week ahead, for example, and they've put the February to June export quota for grains overall at 20 million tons. So they give themselves plenty of space to be available. So the bearishness is still there. But what has been interesting over the past week is a change of focus about Argentina. Argentina is almost fully harvested. It's a big crop. Big crops usually mean lower protein, so that's not a surprise. But we're hearing some quite alarming figures. So those alarming figures are not yet representative of the overall crop, where we're hearing that some areas have got 8 to 9% protein, which is really bad. It's bad feed quality in that sense. And some people are saying that maybe only a third will make milling quality. So there's some uncertainty at this stage of the proportion of feed against milling quality in Argentina. And it seems that the market is realizing that there's much more feed quality than initially anticipated. And that's why it becomes interesting, because it creates a potential for a bounce in wheat, because people are focusing no more on the known very large production estimates that we've been talking for months, but they are shifting to the idea that maybe there's a lack of quality wheat. And if there's a lack of quality wheat, it becomes interesting when we look at the spec position in Kansas and Minneapolis wheat, which have already started to reduce. And some analysts in the US in particular are thinking that the specs may go long in Kansas, maybe even in Minneapolis. So if we have that short covering, it's going to become interesting, because it could provide also short covering spillover into Paris, where by last Wednesday, the funds were still short 204,000 lots. We'll have an update at 4 o'clock. So there's that anticipation that maybe there's a quality wheat issue potential that could rally the markets overall. And that's a time when there's two other headline stories in the market. The first one is cold snap. So wheat is a hardy plant. It can sustain cold quite well. But when we have cold snap headlines, the market has a tendency to react to the upside for a short period of time. So the French have been making noise. We've had -9, we've had -14. Sovecon has made noise on LinkedIn and on its own reports on a regular basis, saying Russia is getting -24 last week. It's probably going to be the same next week. So we have to be cautious of those headlines. And on top of it, to finish with Russia, there's been more, and a private analyst, non-Russian based, saying that they think that the area in Russia might be lower by 3 to 7%, and the output is now estimated in an 81.4 to 83.8 million ton range, which is less than last year, 88 to 91, for example.
Okay, so I want to stay on Argentina really quick. If they end up producing more feed wheat, does that put pressure on corn, especially in the animal feed market?
It does, absolutely. So that's been another point of discussion since we came back to the board. So people are saying that, many people actually are saying that they feel that corn can't go up, that corn has got to go lower, because there's going to be so much pressure, so much competition for feed wheat. So that's going to be interesting to see how that wheat-corn arbitrage is going to develop. But in a way, that argument that corn is under pressure from feed wheat is slightly put aside in the short term because of the Ukraine argument. So Ukraine has had it very hard to export corn over the past few weeks because of the Russians hitting their port facilities, the vessels coming to Ukraine. And it is basically creating a displacement of demand, especially for Western European consumers who, instead of having to wait for Ukrainian supplies, which are not getting out, are shifting that focus to, for example, French maize. So there's a bit of displacement. And to put the export from Ukraine in context and with figures, by the 2nd of January, the Agricultural Ministry was telling us that just under 6 million tons of Ukrainian corn had been exported so far, compared to about just under 10 million tons the previous season.
Okay. And one last question before we let you go. Is there anything or what key things should we look out for in next week's WASDE report?
So the WASDE report will come in on Monday, and it's going to be an interesting one from my point of view for two reasons. First, the USDA should have been able to catch up on all the data that it didn't have during the shutdown, the government shutdown. So it should be a report that should be relevant.
Yep.
And it could explain some of the short covering as well that we've seen this week. And for me, the important bit will be the update, if any, on US corn and US soybean yields. So this is something that with all the geopolitical mess and with all the heavy fundamental news that we've been talking about for months, that has been a bit forgotten. So if you remember, in July, August, we were saying that many people thought that the yields in the US were not as high as what the USDA had in mind, and that we should see from August to January a correction from the USDA by lowering the yields. But we had the government shut down, everything was put on hold, and it took weeks to get back to normal. So there is a possibility that the US will reduce the US corn and soybean yields in this report.
Right.
And that's going to be interesting to see on Monday if it is the case or not.
Understood. Bert, thank you so much. Lovely having you in the studio back after the holidays. And thank you to our viewers for watching. For more financial content, don't forget to like and subscribe to our channel.